Hello and welcome to the stock specific class here for Thursday, September the 15th. A lot to talk about today, but before we get started, if you have any questions during the week or any questions I don't get to in the live class, you're definitely welcome to type in questions during the live class. I'll get to them as I can. I try to, I'm in the middle of explaining something or talking about something. I don't want to get onto a tangent or something like that, so I might wait a little bit to answer the question. I may not answer it immediately, but usually before I move on to something else, I'll look at the question box, see if there's any questions related to what I was just talking about. If something is really a big tangent, I might hold it off a little bit till the end of class to go over it. But be more than welcome to type questions during the class. But if you think of something later on or something as you're analyzing stuff during the week that you have a question with, make sure or anything I don't get to in the live class, because sometimes I run out of time. Just send those to Jerry@traderspro.com. Jerry@traderspro.com. Make sure you write that down. If you forget, it's if you go back and review the recording of the class, you can see that in the very first slide. By the way, you can review recordings of these updates. They're available on YouTube. If you go to the YouTube website, go to our channel, Traders Pro channel, subscribe, and you can get access to. It doesn't cost anything to subscribe, I don't think, as far as I know. You get access to these recordings, and you can review them as you need to during the week. All right. Obviously, last Tuesday was the start of this big move down, and we went over some different scenarios. I'm going to review a little bit of that today. Now, as far as and that's going to be the normal part of the class, going through the update. Now, remember, the process here, I know it seems repetitive, but it's the process you need to go through on a daily basis. If you're trading daily, that is, on a weekly basis if you're just kind of a casual trader. But you need to look at what the current trend of the market is, the current conditions of the market, and then you want to base your strategy on those conditions. And so if the market looks bullish, that's when you want to start looking at things to buy. If the market looks like it's going to continue to drop, you can either stay out and do nothing, tighten up stops on your positions in case they trigger, lower your risk exposure by taking profits and getting out of trades you're already in. There's a number of things you can do, but it all comes back to understanding the current condition of the market, the current trend. So there's a lot of you that might be brand new to trading, or that maybe you've been in trading for a while, but there's some things you still can learn. This is what I go over every week in these classes. Like I said, it seems repetitive, but the better you do it, the better results you're going to get. And who cares if it's boring and repetitive? If it produces results, produces money, that's all we care about. So bear with me if it seems like it's kind of routine a lot of times. I try to mix it up a little bit. I'm going to do that today. Today's class is the stock specific class. We tend to look at charts stocks we can look to get into. Now, this class is usually the best when you're in a bull market, because there's usually you're finding the stocks that are trending the strongest. There's a lot of ideas of what you can get into. In fact, usually we go over more potential trades that you have money to get into on a weekly basis. But it's a great class during a bull market because, like I said, there's a lot of stuff that you can take advantage of right now. You can look to get into right now, and it saves you a lot of time having someone analyze some of those trends for you. In a bear market, it's a little bit more difficult. There's not a lot of things to buy, and as I've said many times, your choices are just to sit out, or there's alternative things you can do. I've talked about a number of times and showed you in the portfolio using some of these inverse ETFs on a short-term basis to hedge the portfolio a little bit, or make some money while the market is moving down. Um, and those are some things that you can learn, and hopefully you've learned over the course of the last several months or so. But the change I want to do today, just to kind of break up the monotony a little bit, but it also is something that I've started to focus on a little bit, because one thing I've talked about for a number of months now, and those of you who've been around for a while, you know it's been a number of months, is explaining kind of the market bottom conditions. What does the market feel like at a market bottom? How do we know when we're close to a market bottom? And I'm not going to just rehash all the stuff I talked about in those previous classes, because that would just be repetitive and it would take up all the time. But the biggest thing that I talked about that I think is probably one of the most important things is that you want to see panic on the selling. You want to see just a flush in the selling where people just give up. They wonder how much lower we're going to go. They wonder if the selling's ever going to end. Every major bottom that I've been a part of, and even beyond what I've been a part of, because I've studied this in stock market history going back years before I was even born, that's a common thing that happens. Now, you might have heard a lot of people talk about this on CNBC or other financial shows or websites and things like that. This isn't new. This isn't something that I am exclusive to, that I know. I'm the only one that knows that markets tend to flush out on bottoms and sell off and panic on bottoms. Almost every professional trader knows this and understands this, and that's part of the problem right now. Is everyone's waiting for it, and sometimes when everyone is waiting for it and they're educating the public for the first time that's what happens at a market bottom, then the market might somehow have to adjust a little bit to make sure that we don't all get it right. Now, how that could play out is that maybe we don't quite get the panic sell-off and everyone's waiting for it, and we somehow kind of stabilize and start trending up from here. Now, that would be one of the first times in history that that's happened off of a major bottom. But you know, the market will sometimes make the lower probability move if it means it's going to fool the most people. If the most people are thinking that they're waiting for the same thing, and the market will fool you and do something you're not expecting. However, I don't want to start focusing on lower probability moves or expecting lower probability moves, because that could really get you into trouble if you start making that your number one focus. The other thing is that you could get a panic sell-off. Everyone thinks, hey, this is it. And this is actually what I think is more likely to happen. You get a panic sell-off. Everyone says, okay, that's what we're waiting for. We got it. And they start buying thinking, okay, I've got the bottom here for sure. And then we have another panic sell-off or another one, another two or something to get to the point where people are like, they just get beat up. They're losing a ton of money. And they're wondering how much worse is it going to get. That's kind of where I lean towards as being the higher probability outcome of all this. But again, I'm not trying to be a market psychic. I know I'm just the homepage here, so I've just been chatting here for a little bit. If you're thinking the screen is frozen or anything, it's not. I'm just riffing a little bit right now, but the point is that I'm not trying to be a psychic or anything. I'm trying to anticipate understanding how human nature works, how human nature interacts with the markets, how uncertainty has to come into the markets in order for a market to exist. These are all things I'm trying to take into account. And what I'm going to go over, if I don't spend too much time on the market update, which I'll try not to because there's not too much to add to what I talked about on Tuesday, I want to start off by making sure we understand trend characteristics, basic trend characteristics. I'm not going to spend too much time on this because there are training videos on the YouTube channel where you can get more details on these. I want to make sure we understand basic Elliott wave patterns. I'm not going to spend too much time on that because there are training videos on that you can reference later on. And keep in mind, if you're brand new to all this, you still have a lot of you have hours and hours of trainings that you're going to need to go through to get a full understanding of this. But I'm going to try to break it down as simply as I can to just kind of help you understand the potential of all that information. If you learn all that information that are in those training videos and master it, how you'll be able to see these yourself. I'm going to help you by showing you what I'm seeing, but if you want to get that knowledge yourself and not need me, then just be aware that information, the trainings are there for you to be able to get to that point. But I want to make sure we understand those basic trend reversal characteristics. And since this is a stock-specific class, what I wanted to focus on today is there are a lot of stocks that are important to our economy, that are important to our lives, that are making and have potential to make huge amounts of money going into the future. Now, I am the last person that you want to look at as an expert on fundamental analysis. Talking about, earnings growth, all the financial aspects of a company. I'm probably the last person to be talking about, what is the future direction of stocks? What's going to be the new technology in the next 10 years? Again, I don't spend hours and hours trying to anticipate that. I've always been someone that tries to simplify things, and my whole focus is let somebody else figure out what's going to be the technology in the next 20 years, and then when I see the trend of that stock moving up, I'm going to jump into it. When I see it being talked about, I'll jump into it. I did this with FANG stocks. I didn't know what FANG stocks were. And if you don't know what FANG stocks are, it's an acronym. Go Google it. You'll Google Jim Cramer FANG stocks, and you'll learn all you need to know about that acronym and those group of stocks. But anyone that first started to trade those when he first brought that out made a ton of money during the bull market. Now, what's important to keep in mind is usually the stocks that led the way in the last bull market won't lead the way in the new bull market. That doesn't mean they won't move. That doesn't mean they won't trend up. Okay, it just means that there are going to be new companies, some that we haven't even heard about yet, or that are very, not as well known right now, that will be the big behemoths later on. That will be the Apple and the Facebook and the or Meta or whatever, Netflix or whatever. They will be the new big companies that lead the way out. So the point I'm trying to make here is, again, I'm not the expert of trying to identify where those new trends are. I'm going to do my best, though, to look at what I think right now, what I can see right now is stuff that we're just scratching the surface on, and companies that could end up being some of those big behemoth companies later on. Maybe they won't. I'm still going to refer back to, you got to read the trends, and if the trends don't confirm it, then that's what matters. It doesn't matter my reasons I give you today. I'm trying to just give you a little bit of a disclaimer that I'm not an expert in fundamental analysis or predicting what stocks companies are going to do in the future. But we're in a unique situation where I know we're very near a bottom, and I want to start preparing for the fact that, hey, if we do bottom out, if we do get that panic sell-off, number one, can I recognize what a trend reversal off of a bottom looks like? That's where I'm going to go through, again, the second half of class today. And then two, what stocks can I start to put in a watch list that if I recognize that those trends are reversing, I can take advantage of that. I can make money as they work their way back up. Now, the first set of stocks I'm going to go through are stocks that are huge companies. We're already familiar with them. And unless something very drastically changes with their business model or their leadership or consumer trends or what have you, they're likely to work their way back up to their previous highs at some point or start trending in that direction. I'm looking at stocks that have gotten really beaten up during this sell-off that have potential for huge rewards for very little risk. Again, once we bottom, and that's going to be key here. I'm not saying jump into these things right now. We're building a list. We're going to get prepared for if that panic selling starts to happen here soon. Now, I've been talking about a panic sell-off, the potential of that. I talked about it in June when we started to sell off in June. We didn't get to that level there. I don't think that's the bottom. So again, just bear with me with this. This could be still months out that we actually will focus on this list. But I want to get started and build a watch list. We want to be prepared, because by the time you recognize that the market is turning around, you know, you can miss a lot of the moves if you're not ready and prepared. Now, maybe all these stocks are just stocks that we end up discarding later on, and they're not even going to be relevant later on. Okay, so be it. But it's something different to do in class today. I hope you're okay with that, and I hope I have enough time to get through it all. All right, so I'm going to go through some of this stuff very quickly, like I said, because a lot of it isn't too much of a change from Tuesday. The market did sell off on Tuesday, and it did move us towards a little bit of an oversold condition, but we're not there yet. So we're in this area right through here. We moved into the sell range on momentum. But again, we're not even in the extreme range yet, and we're not at the far left side of the extreme range yet. So there could be more selling that could happen before the market gets to more of an extreme oversold. Now, once it does, then we got to worry about maybe a little bit of a bounce. I'll take a look at some areas where I think we could bounce, just so you're aware of those. Some key levels on the S&P that we'll focus on. Brett, same thing. We moved from high into the trending range off of that sell-off, but we're not extreme. So we could still drop further. Now, we could rally up a little bit further too, but off of this, we're not. This is just telling us overbought, oversold, and then sentiment is still pretty high. That's been high for a long time, but we've backed off a little bit on that. Buy-sell ratios. We were close together here. That selling on Tuesday pushed the sells up, the buys down. We're still not really we're not up in this range here, so there is a little bit of room to still sell off based off of the buy-sell ratios. And then our sentiment indicator here is trending a little bit closer to the oversold condition down here, but it still could drop a little bit further to get down to that point. All right, so let's take a look at our charts. And I need to jot something down here real quick. I need to jot down a couple of key levels here. All right. All right, let's go to our market update. Hold on, give me a second here. All right. Now, last Tuesday, we talked about how there was that potential that, this could be the start of a new trend. This could be a bullish ABC pattern. This could be where we could have rallied off of that. We had that CPI report Tuesday morning before we had class. It led to this drop. That led to me talking about the potential that this is an Elliott wave move down, a 5-wave move down, wave 1, wave 2, wave 3, wave 4, and we're in wave 5 right here. Wave 4 can't trade in the territory of wave 1. I talked about that. It didn't on any of the indexes, so it followed that rule as far as if this is a potential wave count. Now we had a big sell-off into the finish, even from where we had class. And the expectation is we're going to head lower. Okay, we're going to keep trending down. You get that big of a move down, usually it's just the start. Usually there's going to be some follow through to that. We saw the VIX spike up. We'll look at the VIX chart here in just a second. Whenever you have a big day like that, though, and remember this, you see this is a big candle by itself, but that's not where it moved from the day before. Here's where we closed the day before. If you draw that in as a total candle, gap down, but if I were to draw that as just a big red candle, that's a huge move down, very similar to this one where it didn't gap down. Okay, this was a big move down. Now, after you get a big move like that, although it could continue the very next day, very often you'll get a day, possibly 2 days, where it pauses. Maybe even more than that, but usually it's 1 or 2 days where you get a pause day. This is the market, say, trying to figure out what that move meant. Okay, this is what the market does all the time. Okay, one of the things I'll talk about when I start talking about basic trend analysis is that stocks move in a little bit of a stair-step fashion. If I'm in an uptrend, I'll get a burst of a move up, and then the market takes a little bit of time to figure out what that means. It'll start moving back and forth. Buyers and sellers don't really know. They're trying to figure out, is it going to go higher? Sellers are wondering, is it done moving up? There's a battle that goes on between the two. Typically, the resolution of that indecision will result in the direction it was moving in before it moves sideways. That's why I use the phrase all the time. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. Immediately before it moved sideways, what direction was it moving in, trending in? Because that is the direction that is likely to continue to move in after it's done moving sideways. Now, that is not absolute. Okay, do not assume that every time you see a stock moving sideways, it's going to continue to move in the direction it was moving in before it moves sideways. But most of the time, it will. Okay, it's kind of like the law of physics. An object in motion is likely to stay in. I don't know. I'm definitely not a physics expert, but you understand that law, right? Some of you that have studied it. When you're in a direction, it takes a lot of energy to reverse that direction, or even stop that direction for that matter. Okay, so another way to phrase it is that things will tend to move in the path of least resistance. If you pour water down a hill, that water is going to channel down. It's going to find the least resistant way to travel down that hill. Okay, these are laws. These are physics. Well, stock market tends to do this. These charts tend to do the same thing. So you'll get a burst of a move, you'll get a little bit of a pause. You have to, and then it's likely to continue in that direction. Pause, continue in that direction. And so these last couple of days have just, in my opinion, been a little bit of a pause for that next move down. Now, a key area, these are the key areas I want you to write down because these are going to be critical. I want you to write down right here this low, and these are not exact. I'm not going to get to the penny on these, but this is 389 right here, which is that previous low. If we break below 389, we're likely to come down to this area right into here, which is about 370. The next elevator stop is down here. Now, why did I pick this area of 370? Well, first of all, why did I pick 389? Well, this is where we bounced right here. Buyers pushed the market up right here. So there were people that either believed that the market was going to go up from here, or that were short covering. They believed they better take profits on their shorts, and so they started buying to get out of those short positions. They started doing it right here. If they were buying because they thought the market was going to go up, they likely had their stops below this low, because that's what traders will typically do. They'll look at where the low was. Let's get your stop below that low point. We could extend this line all the way out and see a lot of reactions to it. It rallied off of here, back here, back here. It was resistance right here where it dropped down from it. It broke out above it, retested it right here, and rallied up. That 389 area is significant. We've hovered right at it the last couple of days. This is the market saying, boy, do we really want to do this? If you ever jumped off a cliff into the water or something like that, and you're staring over the edge, you're like, do I really want to do this? There's not too many people that just walk up to the edge and jump. Now, my son, my second son is that person. He's got that daredevil gene in him. I hope I can outlive him, because I just, that kid, if there's something that's risky, he's going to find a way to find it. But most sane people will walk up to the edge, they'll look over, they'll make sure there's no rocks sticking out in the water. They'll ask themselves, do I really want to do this? And then they'll jump. And that's kind of the market right here saying, do we really want to do this? Because, this is really going to drop down to 370 pretty quick. And that's kind of what's going on here. So if we break that, we're going to drop probably down to 370. Why did I pick 370? Because back in here, we saw rallies off of this level right here, this almost exact level, rallied up to here, didn't go anywhere, came back down, retested it right here. Probably the same buyers that were here showed up right here and pushed it up. Now, they had a big run up right here. So these buyers, whoever they are, I don't know who they are, I don't need to know who they are, have done very well on that run up. I don't know how they managed on the way down. Did they take profits? Probably. But if they're still long, if they still think this was the low or this is the bottom, they're probably still in their trades, at least some of their trades. If we get down below this to this level right here, they might try to buy again right here. It worked right here. Maybe they try to buy again right here. Maybe it drops down to 370 and bounces a little bit, kind of like it did right here. I don't know if it would go that far, but maybe it bounces. By the way, this is also an area where we probably get those extreme oversold conditions on those indicators we just looked at, the breadth indicator, the momentum. That might be flashing that the market's oversold, and we could maybe get a little bit of a bounce. These guys might buy right there, and they might get that oversold bounce and think, okay, we're going to do it again. We're going to get this run up again. And then if it rolls over and it breaks below here, not only are they getting out of the buys that they did right here, they got to get out because they're losing money from these buys back here. And then you have to look at the June low. That's the next level that we're going to focus on. If you want to know what that June low is exactly, just put your mouse over. Let's see what day it's at. I'm going to move these lines up a little bit here. That was on June 17th. And the low of that day was 362.17. So we're going to write in 362 right here. Now, there's a lot of people that believe this was the market low. That was the bottom. Now, we didn't get the panic sell-off on that low, though, so that's why I'm skeptical that is the bottom. Again, I could be wrong, but I just don't believe that was the bottom yet. If we break that, though, we break 362, I think you're going to see panic in the market because there's so many people that believe that is the low. We're not going lower than that. By the way, a lot of people think that conditions are starting to improve. We're probably at peak inflation. Inflation should start to come back down. There's a lot of people that have reasons to believe that it's only going to get better from here, and it could only get better from here. But the stock market doesn't always bottom when. A lot of times when the market starts moving up, the worst conditions of whatever was going on take place. So usually the market is trending up before the worst has already happened, not the other way around. Not things are getting better, but the market is going lower, or the market is going. Things are. Let's see, what would that be? Things are getting worse or better, but the market is going higher or something like that. I don't know what I'm trying to say is what I'm really trying to say is that a lot of times that when the market is bottom and started to trend up, the worst conditions can sometimes come out. The worst news, the worst. So anyway, so I don't quite buy into that just yet that we bottomed out there, but I could see that panic take place below 362. So these are levels that we want to pay attention to, because when we're in the midst of a sell-off and in the midst of chaos, we want to know where is the floor? Where do we look at as the floor? We don't want to be just, how far is this going to go down? I don't know what's going on. We want to be able to be able to rationally look at things and understand what's going on, and then profit from it if we can. Okay. All right. So those are levels are going to be important. Now, what if we rally off this point right here? What if we don't? The market has held up pretty good over the last couple of days. I didn't think it was going to hold up as well as bad as it looked on Tuesday. Although I always assume there could be a pause. There's another possibility that still would be bearish overall for the market, and that is that this is the start of a drop down, and that this is maybe wave A, wave B, wave C of a correction of that drop. And once that's done, we could then move lower. Okay, kind of happened back in here. We had this drop, kind of wave A, wave B, wave C, and then dropped again. Kind of right in here, had a bounce up, down, up, and then dropped again. That could be what could go on. Now, how do I know? How would I know that is maybe a possible outcome? Now, by the way, that would mean that we probably need to start rallying tomorrow and Tuesday in a big way, because I think the Fed meeting is the next big event, and that would probably be the trigger that would lead to the start of the next move down. Because I don't think any rally here, would last. I think it would just be wave C of a correction, then we'd head back down. And so what would be the trigger event for to head back down? Well, there's that Fed meeting next Wednesday that's just the obvious one that I would think of that could be that trigger. Now, you can make the opposite argument. Well, what if that's viewed as positive, and what if we just start trending up from here? That could happen too, and we'll address that if that starts to happen. We're not heavily in the market right now, so wherever it decides to trend, we'll jump in and we'll change I'll give you a new outlook if we start rallying in any significant way. Now, what would increase the probability that this could be a bigger move up? Well, when you have this big down candle right here, typically I would look at this and say, okay, if you retraced more than half of that big down candle, this was big momentum to the downside. You go past the halfway point there, you're really reversing a lot of that bearish momentum, right? However, what makes this a little bit more unique, that's easier to do on a day like this because it dropped right from the previous high right there. You could say, okay, if it got to this point and retraced more than 50% of that big drop candle, then that's reversing that bearish momentum. Every time it goes higher, it's reversing, it's making that bearish momentum less effective. Okay. With the big drop right here, we're actually looking at this as being the drop. Where's the halfway point of that? That'd be up around here. But the problem is that you would then be going above the open of that day. And if you go above the open of that day, that's definitely reversing that momentum. So what I try to do here is look back. There's a little bit of resistance right in through here. A little bit of resistance right in through here. So I've got it right around maybe the 399, 398 area. I guess I could look at where these highs are right here. Let's do that. $399. Now that would still be a pretty big retracement of that candle, but so if we got above that, I would say that would reverse most of the momentum of that drop. Again, reading momentum is very difficult because especially for you guys out there that are scientists or mathematicians or engineers, especially, you're used to absolutes, you're used to mathematical formulas, you're used to 1 + 1 = 2. You're not real big on feelings or stuff you cannot quantify. Momentum. But momentum is real. Anyone that follows sports knows what I'm talking about. My wife I always use this as an example. My wife doesn't like it when I use an example, but she gets frustrated with me sometimes because my team will be winning the game, and then suddenly the quarterback will throw an interception, and I start freaking out that this is bad. This is really bad. And she's like, well, wait a second. Your team is winning. Why is it so bad? She doesn't understand the momentum shift of that turnover. That now my team is feeling bad, the other team is feeling a lot of hope, and that can change the tide of a game. But again, it's not a formula. How do you quantify that? What is the degree of that momentum shift? You can't. There's not an equation of that, but you can feel it. There's an energy there that you can tell. This isn't good. There's a lot of this that goes on in the markets, and I try to teach this to you through these updates as I can to recognize momentum shifts. Candlestick formations are a great example of that. I talked about the black candle, although it doesn't show up black on here, but where you're moving up, you have you're moving up, and then suddenly you gap up, but then you drop lower, you trade lower than where you open, but you're still higher than the day before. So it looks like an up day, but that's not telling the whole story. This is a major momentum reversal that most people don't know how to recognize. This stock is going to pull back 90% of the time off of that type of price action. If you can recognize that, you can take advantage of it, where it means, I better take profits on this trade. I made all this money, but that's a bearish reversal. This thing's going to pull back over the next couple of days. Or you trade it, whatever, you can learn to recognize it. Well, this is what I'm trying to point out right here, is that this was a momentum move down. How will we know if we've reversed that momentum? Well, if we start to retrace more than half that move, or in this case, I've kind of just identified this key area right here on that candle. If we get above this, again, it still doesn't mean you have to go higher, but it starts to really reduce the probability that you're going to go lower at that point. And so you want to be able to recognize that, and that's what I'm just kind of pointing out right here. Now, I don't think it's going to get there. Now, could we have another day where it attempts to rally and then next week is when we drop? Could we just be sideways until Wednesday and then it drops off the Fed meeting or whatever? Yeah, all these are possibilities. The bottom line, though, is that the higher probability right now is that we're likely to head lower. And then just get to the basic trend analysis: lower highs, lower lows. We're waiting to go to a lower low right here. That would confirm the downtrend as well. All right, the other indexes are the same pretty much, so I'm not going to spend time on those. Bonds. Now, bonds, I talked about on Tuesday that we did break to a lower low. They are attempting to rally a little bit right here, but they've kind of just rallied up to the breakdown area right here. I would assume they're going to resume the trend down. But they're in a downtrend. We would assume they're going to continue that downtrend. The bonds are going to continue that downtrend. Gold made another move lower. We talked about how this looked corrective back in here. It looked like just another step for another move down. So gold continues to move lower. Oil is kind of confirming the downtrend. We talked about the significance of breaking this support level. So here was a drop, here was a consolidation, and we went to a lower low right here. We tried to rally. Now that we're rolling over and we're down today, that's created another lower high. I would assume that we're going to go to a lower low. I'd be a little bit more bearish on oil right now. And now, again, that doesn't mean that every energy-related stock is going to go down. You remember, there are energy companies that have nothing to do with oil. I mean, natural gas is not oil. It's obviously it is energy, and it's a different source of energy. But there are pockets here of stocks that could be trending upward. Even if oil itself is dropping. But anyway, that just look at the charts, but a lot of the energy stocks are showing weakness today. But the oil itself looks like it's still kind of trending lower right now. The dollar looks like it's still trending higher. It had this little pullback right here. Tuesday, we talked about this big move up. It's kind of paused a little bit after that big move up. That's typical. We see that happen on big moves all the time. That's why you don't really want to buy in on a big up day or a big down day, because the more likely you're going to get a little bit of consolidation off of that. Now this is a little bit more relevant if you're trading something like options that have an expiration date. If you're a stock trader, you can wait it out, but I do a lot of option trades, and I don't like to get on a big up day or a big down day, just because you can move sideways for a couple of days and then you have to deal with time decay and things like that in your options. But the dollar looks like it's still trending up. The VIX, we saw the big spike up on Monday or Tuesday right here. We still haven't broken higher. We've just kind of paused, but that's what to look for here on the VIXY is, do we break out above here? By the way, remember the VIXY does not perfectly show you the movement of the VIX. I can pull up the VIX here on another chart. And you don't have to subscribe to another charting service. There are free charting services out there. If you type in free charting services, you can find one that would allow you if you want to look at a chart of the VIX from time to time or whatever. You're not interested in subscribing to another service, you can just type it in and find it. But the area of 30 on the VIX, which is right here, this is the area we call the area of freaking out. This means that the institutional traders are very concerned about the selling that's taking place. They're not panicky yet. I've got 40 up here. Is that's going to be my signal of panic selling? However, again, don't get too locked into an exact number. If we had a big market sell-off and the VIX spiked to 39, okay, that's a pretty significant spike, and I could there's a possibility that could be the panic that we were looking at, especially since the June, these previous sell-offs did not get above that. Well, it didn't get close to that 40, or didn't get above that 40 level there. I think it'll be higher than 40, but just be aware that we're still not showing any fear in the selling. And so anyone that comes on TV and says there's been fear in the selling, or I've had a few people that showed up on CNBC like, there's a lot of panic on Tuesday, and that's a buying opportunity when you see that panic. And I'm like, that wasn't panic. That's why we have the VIX indicator, because it measures the level of freaking out of the big institutional investors. That's my layman's definition of the VIX. Those big professional traders weren't buying protective puts heavily, which they do when they're really freaking out or really concerned. The chip stocks are underperforming. In fact, they've already gone to a lower low right here. They've already, with today's intraday low, gone lower. I think that's significant that they are leading the way down. There's no sign of a bounce off of these right now. I think that they're signaling that we're going to start moving lower at some point. Again, these are not perfect timing signals that it's going to happen immediately. Transportation stocks, I'm going to skip through some of these because I got to get started. Bitcoin still looks bearish to me. And then the high yield corporate bonds have moved lower. They're confirming the downward move, and they've actually gone lower than the move on Tuesday. So I think that we should start seeing the market reaction to that at some point. All right. Let's get into basic trend analysis first. This is what I call my really rough definition of it is I call it the kindergarten crap. It's very basic and very fundamental, and some people it insults their intelligence. They've spent years and years as an engineer or a mathematician, and they've learned concepts that I have no idea exist. And here's somebody showing them, this basic doodling on a chart that can make all the difference in whether they're going to make money or not. They're seeking the mathematical formula that's going to crack the stock market code, and I'm showing them doodling that will show you how to read basic trends and will make you far more money in your lifetime than trying to figure out that mathematical formula. But the basic trend characteristics are what I talk about all the time. When stocks are trending up, you tend to have an impulsive move up or a sharp move up in that direction. And then there's a pause, and that pause tends to be more choppy and more sideways, and very often there's a little bit of a pullback as it's moving choppy and sideways. Once that corrective move is done, the stocks will tend to move in the direction they were moving in before. You'll get an impulsive move up, and then you'll get corrective. You'll get impulsive move up. When stocks reverse, you tend to get back-to-back impulsive moves in the opposite direction. Or to slow this uptrend, you got to get some definitive move that shakes that momentum, that reverses that momentum. You'll often get an impulsive move down. What confirms the downtrend then, or the reverse trend reversal? Well, very often then the market will then now try to rally, but it can't rally very easily. There's not enough buyers, or the buyers aren't very confident. That rally tends to be more choppy. That leads to another impulsive selling down, another choppy correction trying to rally back up, impulsive down. When you get to a bottom, very often you'll get impulsive down, impulsive up, and then the trend will continue, you'll get corrected. So this is critical, okay, to understand. Now, these are your general characteristics, okay? I'm not expecting everything to play out exactly this way, but you're going to find if you understand this, you're going to be able to read these moves a lot easier, and you're going to be on the right side of them a lot more. Now, what we're dealing with now is a bear market. At some point, this bear market is going to be done. Right now, we're still trending down. I don't know when that's going to end. I'm not trying to predict exactly when that's going to end. How will I know where it's likely to end? Well, you're likely to get two types of bottoming processes. There's another bottoming process that's a little bit different than this V-shaped one, but you could get a sell-off that causes that panic selling followed by a sharp rally of buying. Now, how do you know that sharp rally of buying isn't just going to lead to another move down? Because that's what's happened right through here. You get buying and that led to another move down. Well, because first of all, it'll tend to be sharper than normal. It'll be a sharp direction instead of a sluggish rally. It'll tend to be very sharp. And then when it pulls back again, the key characteristic is not going to pull back sharply. You're not going to get an impulsive move down. It's going to be more sideways as it pulls back. That tells you that's an early signal that you could be in a trend reversal. Now, when we talk about trend trading, I think this is very important. When we talk about trend trading, there's a belief that the trend already has to be in place in order for you to be a trend trader. That is not the case. As a trend trader, you need to specialize in recognizing trend characteristics so that you can choose when you want to try to enter the trend. Now, entry points into the new trend there could be a riskier entry, a more safer entry, and another risky entry if you're late getting into a trend, a late entry, which can also be considered a risky entry. If the stock has an impulsive move down, then an impulsive move up, and then this is corrective, and it starts to move back up again off of that, I can recognize this as a potential trend reversal. I can still be a trend trader saying, hey, this is acting like it's starting a new trend up. Now, this is a riskier entry because I don't know for sure if I'm wrong. Some of these fail, and it starts to act like a trend reversal. It comes all the way back down. Those of you who've been around a while, you've seen this happen. Hey, this looks like a nice trend reversal. Then we end up getting stopped out of the trade. But again, I could decide I want to take a little bit bigger risk that this is in a trend reversal. Get in right here, put a stop down below this low. If I am right, we should get back up to the previous highs right there. So there's potential big reward for little risk. That's the benefit of recognizing a trend reversal early. And that's what we're trying to do with these stocks I'm going to bring up, is we're trying to look for, we're going to build a watch list first, and then first of all, we want to wait for that flush out sell-off move, but then can we look at key areas then of where we can be more confident that the trend is reversing back up? Because a lot of these have very strong potential to have big returns over time if they do start to trend back, if you do get into them in a new bull market. And that's what we're trying to do right here, is we're going to try to be prepared to make a lot of money if we go back into a bull market again. Now, another thing I could do is I could say, okay, that's just too risky for me. Okay, then wait for it to have another impulsive move up and then have another corrective move. Now you've got higher highs, higher lows. Now remember, these are basic characteristics too. Is the stock putting in higher highs and higher lows? It's acting like an uptrend. Went through here, it went to a lower low and then it had a lower high. Now lower high or lower low, lower high. Now it's acting like a downtrend. Now, right here, it didn't go to a higher high yet, so that added to a little bit of the uncertainty, but now it did. So there you got your higher high. That was a higher low. You have this correction right here. Okay, is that another higher low right there? It starts to move up. You get in. Now, this is actually looking more like an uptrend. This might be a safer entry within that trend. Then you get another move up, and you're like, okay, now they're really in an uptrend. But now you have to start to worry that you're in the later stages of the uptrend. Now, this is where Elliott wave, basic Elliott wave comes in that can be very helpful. Again, I'm not an Elliott wave fanatic. I don't encourage anyone to be an Elliott wave fanatic, because they believe that Elliott wave explains everything, and it doesn't, or can predict everything, and it doesn't. But the main strength of Elliott wave analysis, to me, is helping me recognize where I am within the trend, where I'm likely at within this trend process. The basics of Elliott wave is that when stocks move, they tend to move in impulsive moves. When they correct, they tend to move in corrective moves. That's the basic stair step I just showed you. The difference is that when you're in an uptrend, there tends to be 5 waves, 3 main motive waves or impulsive waves within that uptrend. So when the stock is in an uptrend, you have an impulsive move up. That's wave 1, corrective, wave 2, another impulsive move, wave 3, corrective, wave 4, another impulsive move, wave 5. Wave 1, 2, 3, 4, 5. If I understand that, I'm analyzing a chart, then I can start to recognize, hey, I see an impulsive move up. Here's a corrective move. Here's looks like another impulsive move up. That could be wave 3. I could be just starting this uptrend. There's potential for this thing to go up a lot further. On the other hand, I might see wave 1, wave 2, wave 3, wave 4, and it's starting to move back up right here and say, yeah, there's a clear uptrend right here. But the problem is I'm probably in the later stages of that uptrend. Doesn't mean I can't trade it, but I might trade it differently. Instead of looking for a $10 or $15 move, maybe I'm looking for a $3 to $5 move and say, okay, this could be the final move right here. I'm just going to try to trade this for a couple weeks. It's a clear uptrend, so I have the trend in my favor, clearly in my favor. But I'm recognizing that I could be in the later stages of that uptrend. So let's just try to reduce let's not get this, I'm buying the next Microsoft at $5 and it's going to go to $500. Let's just see if I can't get a high probability $3 to $5 move or something, knowing that I could be in the later stages. Or I'll let that, maybe this isn't just a wave 5, or it's a really extended wave 5. It does make a $10 or $15 move. Maybe I'm going to use a trailing stop, but again, I recognize that I'm in the later stages of that. So I'm using a trailing stop, but any sort of sharp move down that looks like it could be reversing, I'm going to take profits, get out. I'm going to have down here, I'm going to have a looser mindset. Boy, I'm near the bottom. Any down day isn't going to freak me out because I still think there's a lot more upside there. I want to have a wider stop down here to give it a chance to make that bigger move because I think I'm early in the trend. That's really the benefit of understanding these Elliott waves. Now, once those 5 waves are complete, you often will then go into a larger ABC correction of that move. Wave A, wave B, wave C. And then the trend will continue. Then you're expecting another 5 waves up, 2, 3, 4, 5. Now there's a whole bunch of rules involved with all these wave counts. I'm not going to get into the rules. They're in those trainings, but I want you to just understand the concepts here, understanding that these cycles exist. And I can still apply basic kindergarten analysis. These are higher highs, higher lows. What is a trend reversal? Well, it's a wave 5 impulsive move up, followed by wave A, which is usually an impulsive move down. Wave B tends to be more choppy, more corrective as it tries to rally back up, and it can. It's not as sharp. People think this is the buying opportunity. This is the pullback. Buy the pullback. It's sluggish, though. It's not done pulling back, and then bam, you get an impulsive move down for wave C. Then you get impulsive down, impulsive up. That could signal potentially moving from the end of that correction, especially if you can see that ABC. You get impulsive down, impulsive up. You think wave C is now going to wave 1, and then that's followed by corrective. And again, get back to the basics, lower highs, lower lows through here, and then suddenly you go to a higher high, higher low, higher high, higher low. These are the fundamentals. Get them down. Okay? Start looking at the charts and seeing if you can see them. So if, again, in the most basic way, without understanding anything else, how could I know where if a trend reversal on the SPY could be taking place? Well, right now it's acting like a downtrend. Lower highs, lower low. This put in a lower high right there because we dropped down from that. I don't know what it's going to do right here yet. If it goes to a lower low, it's confirming that downtrend. What if it holds right here, which I would call this an even low, and it goes up and it goes above this high right here? That's a higher high. I could be in a trend reversal. Then it pulls back a little bit right here, and then it goes up again. Oh, that's a higher low, goes to a higher high. It's acting like an uptrend. Now that's what was going on right here. You know, we higher high, higher low, higher high. This is kind of a little bit of a sideways movement here. So there's a little bit of a higher low, higher high. It dropped down right here, but it didn't really take out. It didn't go to a lower low yet. It could just be a higher low as it started to move back up right here. When did we know that this thing was in trouble? Right on that sell up right there, went to a lower low. That put in a lower high right there. Or actually, this lower low came all the way down to here. Tried to rally back up. What was I showing you in previous updates? I was saying, boy, if we get above here, that'd be back above a higher high. This would be really key if it got above here. Failed to do so. Confirm the downtrend. All right, so you have those basics down. What I want to do now is look at, okay, what are some key stocks? And again, this is not meant to be an all-encompassing list. I was just going through just in prep for the class off the top of my head. I'm probably missing some very key companies, but you can add to this to your heart's delight. And if there's if I'm wrong on a company that you can say, well, Jerry, there's no future in that, or I don't believe in the future, then fine, disregard it. I could be wrong. I'm not an expert in this, but if you are an expert in this, you need to start. I am an expert in reading the charts, and so that's where what I'm trying to do is find these companies I think could have big potential when we finally reverse this downtrend, and then I'm going to focus on the technical analysis and you know, now some of these aren't always going to show up on, and they're definitely not high strength ranks right now. So as far so I'm not trying to base this off the software right now. Okay. I want us to prepare a list of just companies that aren't likely to disappear. They could, but they're not likely. They're likely to be around and be useful for us in the future. And that will likely, if we start trending up, show up with higher strength ranks and things like the software will start to identify. Okay. I'm trying to do something different. Okay. So don't start sending me emails and saying, well, these stocks are in clear downtrends and this is supposed to be a trend following class. It is, but we're trying to get prepared to recognize when we could be in the early stages of a trend reversal to try to take advantage of new trends that could start to develop. Okay. All right, that's my disclaimer. Now, the watch list I'm going to use is one I just set up before class, which is my long-term trends watch list here. Top of the list, Apple. Now, what I'm going to do here is we're going to go back more than 2 years. I want to go back, so I'm going to go by calendar. Hopefully this will work because sometimes it doesn't always go back with me, but I'm going to go back just a few more years here. Okay. This is Apple. Now, Apple is going to be a little bit different here because it's held up very well during the market pullback, but it did have a pullback. Here's the uptrend right up through here. You can kind of look how it kind of pulled back. This looks like maybe wave A, wave B, wave C. Now, I don't know. I don't know if this is the bottom in Apple. We still haven't seen what happens when there's a bigger sell-off. So but let's say this is the start of a move up, and maybe this is wave A, wave B, and Apple has a big move down and the market panics or whatever. Maybe that's just a smaller ABC right here. Maybe this is the wave one of a new move up. This ABC is wave two of a pullback. It could also look like it's forming a little bit of a inverse head and shoulders pattern. But again, I think if the market sells off, this is going to go lower. So don't buy into that. The only way I'd buy into that is if the market just starts taking off from here and this starts breaking up above these levels right here. You'd want to definitely be buying it at that point. But this is not one that's pulled back deeply, but it's one I want to have just because it's been a leadership stock forever, and it's nice to have some of these no-brainer stocks just to hold on to. Jim Cramer says don't trade Apple, just own it. There's some truth to that. It's just it tends over time just to keep going higher. Until it doesn't, it's a no-brainer one you'd want to own. Although again, in the near term, you got to be careful of that because it is a crowded trade. So many people have that belief. I think it's going to get broken down a little bit here. To where there's going to shake out some people that aren't committed buyers, that aren't just owning it, and so I think there could be some better entries on it. But we're going to keep it in the watch list. By the way, I forgot to point out, I talked about the V-shaped bottom, which is kind of the typical Elliott wave or trend analysis type bottom. There's another type of bottom, which is kind of the U-shaped bottom, where you'll get these stocks have been trending up and then they drop sharply, and then they kind of form a little bit of a base. They start to kind of go along a bottom right here, and then they start to move back up. The reason why I like these is these are what we call cup patterns, and if you can recognize you're going up the right side of the cup is where, if you start seeing it stair step up, higher highs, higher lows, and you're on the right side of the cup, the potential of these, the reason why we like these is very often they'll rally back up to the previous high, and then they'll move sideways a little bit. We call these cup with handle patterns. There's the cup, here's the handle. And what makes these so explosive is when they break out of that cup pattern, there's a rule of thumb on these where when they break out, there's a tendency for them to go up the same distance as the top of the cup to the bottom of the cup. So you can take that distance, project it upward, and you get really excited at the potential for some of these and how far they can go. Now, they don't always go that far. A rule of thumb is not a law, but it doesn't become a rule of thumb because it rarely happens. It happens enough times where it piques your interest in it, and it's something you want to pay attention to. All right, I'm just going to scroll through these here. Microsoft. Again, Microsoft, look how far it's pulled back right here. I don't know if it's done pulling back. I'm not saying go buy Microsoft. Right now, it's acting like a downtrend. Lower highs, lower lows, lower high. I don't know if this is going to go to lower low. Probably if we have another sell-off. But what I want to look for is what if we go to a lower low, we start to move up, and we start to get higher highs and higher lows. And, so this right here is going to be as of right now, actually, well, if we break lower right here, then this would be a key spot because this is a lower high right here. You want to look at the last, in this case, the last major lower high was right here. So if you break above that, that's significant. So as of right now, that's significant. Now, if we drop lower and then we have a rally and then we drop lower again, this would be the next thing. That would be significant. You'd wait for it to break above that lower high. We don't have that yet. But again, this is what we want to keep these in our watch to see if they start acting like uptrends. And they're not acting like uptrends yet, but we can see here's a large move up. This looks like a choppy correction. That's what happens in corrections. You have the impulsive, and then when they pull back, they tend to be more corrective. NVIDIA, the chip stocks, they're going to have to lead the way back up. Look how far NVIDIA has dropped down. Again, I'm not at the beginning of this run up right here. I don't want to go back too far, but this looks like a possible ABC correction, although we've gone lower. We're still going lower. We're still trending lower. So right now, the key high on the NVIDIA is going to be right around 192. Now, it can change, but that's where it is right now. We went to a lower low. That was the last lower high. We see a big sharp rally at NVIDIA and we get above 192, especially if it's impulsive. We'd want that to be a sharp move up. If it does this, if it starts rallying back up, but it's like choppy and sluggish, and even if it is sluggish and it goes above that high, I'm not going to trust that as much, because what should happen is you should get impulsive down, impulsive up, or it would form kind of a bowl-shaped move. It'd hover around down here and then start to work its way back up. But I want to start looking for those characteristics, because some of these have pulled back. And again, look at the potential. If I can recognize, I'm not expecting to get the bottom. I'm not trying to get the bottom here, but if it gets above 192 and it goes to a higher high and it's an impulsive move up and the market has already had that panic sell off, man, if I could get in at 190, let's say 193, and the previous high up here is 346 or around that area there, man, that's a good trade. It could take time, obviously, but if we're getting into a new bull market stage, there's going to be demand for chips. I don't know if that demand is there right now. It doesn't seem to be. But we want to keep it in a watch list. Let's be prepared. AMD, same thing. I'm not going to spend too much analysis on this one because it's the same analysis basically, except to point out that there's the last lower high. Amazon. Could Amazon go away? Well, there's going to be a lot of other retail companies that go away before Amazon. It's kind of the behemoth there. So, but it's pulled back significantly. Now, this could be interesting here because it's pulled back. I still think maybe this is wave A, wave B, wave C. Do we take out these lows? Again, the key is going to be, when do we have the panic sell-off and how do these look after the panic sell-off? If we have panic sell-off and this is in Amazon puts in a higher low when the market rebounds, that's a very bullish sign. It didn't go to a lower low. Maybe this has already started to bottom out. You'd want to maybe look for an impulsive move up, or look for it to, again, at least get to a higher high at some point. Let's keep it in the watch list. Google. Again, these are no-brainers, and I'm not saying you have to trade these, but these are just stocks that are going to be around, and they pull back significantly. Now, this has also gone through a stock split, but so here was a consolidation right through here, is a move down, and this is one that I think is, especially if the market sells off, it's going to go to a lower low right there. It's still trending downward. It's still acting like a downtrend, but again, we're waiting for the signals that it's changing trend direction, start to change that direction. And by the way, not all these stocks are going to reverse trend at the same time. Like I said, some of them have held up pretty well during the sell-off and will continue to hold up well. And they probably are going to be the first ones to rally to new highs. Um, but um, but we can analyze each of these and enter into them as each of them as they start behaving like uptrends. Tesla, boy, talk about. I was just out in California last week, and some of you may follow the news. They had that mandate where it's like in 12 or 15 years or so, every car has to be electric or at least a hybrid of some sort in California. There are Teslas everywhere now. My thought process was, Teslas are everywhere, but in my state they're not everywhere. There are quite a few of them, but in many other states out there, they may not be everywhere, but they are the premier electric vehicle company, and you can tell that by how it's not pulled back very much. Now, this is going to be a little bit of a theme with some of this I'm going over with you today, because with the new infrastructure bill, there's a lot of money pouring into these electric vehicle companies, charging companies, and things like that. That's going to be a trend, and it already has started to be a trend. Tesla is one that, again, I still think I'll get a better entry price when we have a panic sell-off, but this has held up pretty well during the bear market, and I think this one's got a lot of room to run, and it's acting pretty good too. This looks impulsive. This looks corrective. Still could drop a little bit, still look corrective, still be part of that correction. But this is one that I think you have to take a look at. And again, I'm not talking about valuations or what are expected future earnings or do they pay a dividend, or which they don't, but I'm just talking pure trend. And again, also part of that, it's expecting that it's not going to go away. Disney, been beat up. You got this. You had a little bit of an, you were trending down, lower highs, lower lows, a little bit of an impulsive move up. Now this could be wave A, wave B, wave C. You could still get more of a corrective move back down. This is showing some signs of potential trend reversal. Now, also, again, these have low strength ranks. You could wait until they act like an uptrend and their strength ranks improve. Okay. And so again, I'm not trying to just say we're going to ignore the software. This is just a whole different exercise. It's just something new I decided to do today. I'm going to keep throwing that disclaimer out there. Home Depot, a lot of these retail stocks have gotten hammered. Home Depot's really gotten hammered and still could go lower. This is one we want to start to wait until it starts acting like an uptrend. Started to act like a little bit of an uptrend right here. Went to a higher high right here after lower highs, lower lows. But it's getting back down to these. That might be a failed move, and it could end up going lower. Yeah, we're just putting in the watch list. Costco, this has held up very well during the market sell-off, but it could still have some, it could have some more downside here. You could look at this and say, is what jumped out at me on this one is, hey, this could be a little bit of a bearish head and shoulders pattern. Yeah, it could be. Let's wait and see how these things look after we've had that flush out sell-off. And can we recognize when some of these are, again, that's the whole point, because these are companies that are going to, I could just see them doing well over time. Now, and so when those market conditions look good again, I can find some of these that are acting like they're going to go back up, and there's a potential for them to go way back up. I want to take advantage of Meta. Facebook is trying to figure themselves out, but they're behemoth. They second to Google as far as advertising, an advertising company out there, very, very big. They're trying to get into the metaverse. I don't know if that's going to be something that's going to be huge. It could be, but they are innovators and they pull back quite a bit. And if they can figure it out and the market starts trending up and it starts trending with it, I think there's potential there. Uber, I don't see this going away. And this is actually starting to act a little bit more bullish. Look at this kind of a little bit of a bowl-shaped move right here. You know, if this can break out, that could go to a higher high, higher low. This definitely looks impulsive. This looks a little bit more corrective through here. I'm not saying to go buy it because, I don't really want to buy anything until we sell off. I tried look at diversifying a little bit. Bank stocks. JP Morgan is my favorite bank stock. I think it's one of the most well-run banks out there. Again, it's been beat up, but it's starting to flatten out a little bit right here. Doesn't mean it couldn't have a little more move down, but you're looking for that bottoming process and starting to act like an uptrend again. Boeing. I don't like the airline stocks, but Boeing would be a play on kind of airlines. There'd be more demand for airlines. Look for that type of turnaround there. And then now we get into more of the speculative type names. This is a company right here that I first found out about this company watching 60 Minutes. They did a segment on autonomous vehicles, and this is a company that's an autonomous truck company, and they already have these trucks on the highways. They're already doing these test runs with these trucks. And the reason why this really piqued my interest is I can't see myself wanting an autonomous car right now because I like to drive and be in control of driving, but I can see the benefits of transportation. You know, you have truck drivers that have to stop and get mandatory rest, that have to stop and go to the bathroom, have to stop and eat. An automated truck doesn't need to do all that. It's more efficient. Now, this company isn't making money yet, but the light bulb went off when I saw that segment on 60 Minutes. That, man, this is going to be big in the future. But look at the stocks. This stock could go out of business. I'm not trying to say jump into this thing, but here's a stock that's starting to base right here. As economic conditions improve, as now money isn't flowing into these stocks because they're not making money, and that's been the key thing. When you're in these recessionary periods, you don't, and then you're in tightening phases with the Fed, you don't get into companies that aren't making money. It's too risky. But at some point, we're going to bottom out of this, and the Fed will start to ease. And these are companies you want to have in a watch list. Definitely not saying buy right now, unless you're saying I don't think they're going to go out of business and I'm willing to wait, or I'm going to risk a little bit now in case they go out of business. Because some of these companies, I don't know who's going to survive. There's others out there. This is just one that I thought was significant as they picked it to highlight on 60 Minutes. I just didn't feel like they would pick the worst of the group or the most vulnerable in the group to highlight. But again, maybe there's another one that emerges when things start picking up that does the same thing. The point is I would be looking ahead at these types of companies, because I think they're going to be huge when they get this. And they've got the technology pretty well figured out. I mean, a lot of it too comes down to some of the legal issues that companies are worried about, that if they're in an accident or something and with a liability and all that. But anyway, I thought I'd throw that out there. Again, terrible strength rank, could go out of business, but put it in a watch list. If things start to trend back up, it's been as high as a $80 stock. Now that was during the free money COVID era, but there's definitely potential there, I think, in some of these groups. Rivian, another alternative to Tesla. This is starting to this could be a big player with trucks. Their kind of main focus is electric trucks, although you've got, Ford and Chevy, they're looking at electric trucks as well. But this has been basing right here. Again, could it go out of business? Absolutely. But I'm looking at, as of right now, you can see, well, you've got a little bit of a higher low right here. You're about ready to go to a higher high. It's up today with the market being down. You remember, a lot of these stocks are going to be related to that infrastructure bill. That a lot of money is getting poured into this stuff, and so the market can stabilize. These stocks have potential to rally for a while. Blink Charging, these are charging stations. Although again, I'm not saying Blink is I'm an expert in knowing which of these is going to be the best. I don't. I think the ChargePoint actually is probably in a better state. But again, look how far this one's pulled back from its highs. And now a lot of that funding is going in. Again, it has not acted like an uptrend yet. If this is a higher low, can I get to a higher high right here? Only a 56 strength rank. So, some of these just aren't showing up on the strength rank scale yet. But get them in a watch list. Plug Power. Now, this has a 92 strength rank. Big pullback off the highs. A little bit of a bowl-shaped move right here. A little bit of a cup with handle formation. If it breaks out, rule of thumb is that you can take the distance of the base of the cup to the top, or bottom to the top, project that upward. If that lines up with this resistance area right here, there's a potential target area if we break out. Now, key is break out. Could we pull back a little bit further on a market sell-off? Sure. Definitely not telling you just go get in this one right now, but if it can break out above here, that's why you get it in your watch list. ChargePoint, this is the one I like a little bit better. 79 strength rank, but again, it's starting to act like a little bit of an uptrend. Lower highs, higher lows, higher highs. We'll see if we can break out to a higher high again here. This was the last significant lower high in the downtrend. That's going to be a key area. So here's the last lower low right here. What was the last lower high after this lower low? Right here. That's going to be significant, because then right through here you have these smaller higher highs, higher lows. If you can break that significant lower high right here, that would be major bullish right here. So keep it in a watch list. I got to hurry up. Lucid, another electric company. Again, it's been flatlining here. We would need it to start acting like an uptrend, but that's why we have it on the watch list. And we notice it's starting to base a little bit. Let's wait till it starts acting like an uptrend to get in. So again, I'm still a trend trader. Okay, I want to point that out. There are different forms of trend traders. I'm trying to look at early signals of a new trend. I'm not trying to pick a bottom and say, hey, this is bottom, go get in it, because I know it's not going to go lower. No. And you shouldn't be doing that. I'm hoping you're not doing that with this analysis. Every single one of these, I'm saying we need confirmation. We need market momentum behind us. We don't have that yet. We're building a watch list. Be patient. Airbnb, big pullback. Looks like an inverse head and shoulders pattern right here. There's the breakout area that's going to be key on this. You can take the distance from the top of the head to the bottom of the head, project that upward. Target area. Although you got a lot of resistance or support right here that could be resistance. You'd have to break above as well. But that one's looking interesting to me. Starting to act like an uptrend. SunPower. Big pullback. Higher highs, higher lows now. Now this was the last, that was the last significant lower high after this lower low. We broke above that. This is acting like it's reversing trend. And again, this ties into the infrastructure bill. All right. I think that's it. Yep. Went way long today. I knew it was going to be way long because I had a lot I was going to get into today. Hopefully this is helpful and a little bit different. And we'll kind of keep coming back to this. Let's get back to just a 6-month chart here. We'll keep coming back to this as we go forward. As I see potential for, especially if we see a big panic sell-off. Now, we're getting real close here with, we have moved lower today. We might break that low today. That, again, I'd like to see it close below that 389 area where it, this is showing we're not quite there yet. Yeah, because you got to get below this intraday low right here. But keep an eye on that 389. That could be set up for a bigger drop. All right. Have a great week, everyone. We'll see you next Tuesday for the next market update. If you have any questions again during the week, send those to Jerry at traderspro.com. Have a great weekend, everyone. Bye now.